I want to wind up by 4:30 to 5. I don't want to extend because it's tiring for you guys and for me as well. So let's start, right? So you have seen the Nifty 50 stocks gimmickry, right? You can do on Nifty 50 Junior. Same tabs, price data, factors. This is hiding different weights and some sheets, just I kept it for working, right? This is the same factor is market cap, right? This 8. And sort. Largest to smallest. Okay. So your 100 in top 10 has become, I think this one. And your 100 in bottom 10 has become this much. And your 100 in junior Nifty has become this much. And this is up to 2020. 2021 data you can patch up. I think it's already there. Yeah, it is there. You just need to put 2021 and you need to put today's price of all these stocks. You just go to NSE down and download and put it there. So you'll get the running story for 2021 or 2022. Now, just pay attention here, these two places, and whenever you find it, you tell me, stop it, or just 2 minutes break I will give. That's market cap. Then after market cap, what it is? Beta. Beta is 9. I will do small to large. Doesn't matter, right? If I do here, they interchange. Top and bottom interchange, right? So the beta is 584. 100 becomes 584 in beta in junior Nifty. Now R2. Sort 793. Then volatility. Then 4. Those 4 factors. Copy them into different weights and fiddle. One thing what I have to tell you is in R2, in one particular year, there is one negative number. Sorry, beta, I think. The beta is 9, right? See, this is a negative number. I think it's Glaxo or some other stock, some stock. If you get that particular stock in your top 10 or bottom 10 portfolio, your weights will be negative. So don't fiddle on beta in that case. So when you go here, shit, this is obstructing me. When you go here, when that particular scenario comes, you won't be able to fiddle with beta. Fitting is here. You have to, you can only put equal. You cannot put any other weighting mechanism because it gives you negative allocation, portfolio allocation. Right? This particular, I don't know what I kept it here. I think you can figure out. Okay, this model is low R2, if I'm right. I think, yeah, low R2. And I fiddled something like this. It's pretty straightforward. It will take half an hour for you to figure out on your own. This is the story. Whether it is right or wrong, you have made it 10 times. Your money has become 10 times in 14 years in this particular combination. With just 2 down years. Is it exciting or no? Answer, guys. I mean, is it exciting or this particular model, some model which is just invests in 10 stocks in junior Nifty for 100 rupees has become 10,000. Sorry, 1,000. If history repeats the same stuff, if you start today in 2035, your 1 lakh might become 10 lakhs. I'm not letting you experiment with this sheet during the session because I want to move to the next step. And I will provide this sheet to you after the session, so along with the recordings and everything. So we'll close this. Any questions so far?
Beta, how come it became minus?
Sorry?
This beta for particular Glaxo stock in 2009, it went into minus territory, negative territory.
It is what it is. That's what NSE guys has given you the number. And they're pretty accurate.
Okay.
I'm telling because when you fiddle here, you will get surprise like minus 100 or it might throw some due by zero or some nonsense like that. So before you get confused, I am myself I'm telling enter into that problem. Right?
Yeah.
Right. So this is not what I promised in the screener session. This is something extra. In the screener, generally I'm a fan of running a few screeners. Not there are thousands and millions of screeners that you can run because you have the data. So NSC gives you various strategy indices. Like if somebody has attended yesterday's class, you would have got a fair understanding of that. If you haven't attended, please do attend next time whenever I conduct that course. Just 1,000 rupees, not a big investment. I do it once in a month or once in 2 months, depending on my free time and everything. Right. So you have various strategy indices, right? Like multiples of them. About indices. This is the place where you will get the details of that. Broad market indices, which is what we have seen Nifty 100, Nifty 50, Nifty next 50, things like that. Nifty 50, Nifty next 50 is 50 plus 50, 100. That becomes Nifty 100 index. Nifty 500 is a broader 500 stocks index. Nifty 500 minus Nifty 100 is this one. Nifty mid and small cap 400 index. The companies that can't make into Nifty 500 will go here, Nifty micro cap. So that's broad market indices for you. Okay, now we have sectoral indices. There's nothing great about it. If a stock comes from auto sector, put that into auto index. Now, when you put 10 or 15 stocks like that in each index, you have to choose a weighting mechanism. The easiest weighting mechanism for this index spending guys is market cap weight. So Nifty Bank Index will have 10, 12 bank stocks, and depending on the free float market cap, that's what the weighting generally. So they have about 12 companies. HDFC has 30% weightage, followed by ICC, which is 22%, things like that. That's your sectoral index. Like that, you can make as many sectors as you want. And then you have, I'm not bothered too much about this thematic index. It's bullshit. Like Tata index will become one or something like that. So I don't pay any attention to these. I pay attention to these indices, which are basically your factor indices. Your factors are basically you take any factor and run some formula and make an index out of it. So out of all these indices, popular ones are Nifty 200 quality, which is it's basket of Nifty 200 stocks selected by a factor called quality, and I will tell you how he defines quality. Quality is nothing but these three parameters in the balance sheet: return on equity, debt to equity ratio, and EPS growth over the last 5 years, and give some weightage and get a score and rank the score. Top 30 companies will form that particular index. And you have momentum, which is this one. And you have alpha, low volatility, somewhere Where is it? Alpha low volatility. Okay, it is somewhere, right? Now what I'm going to teach is how to construct these four factors. Not all four, only the two. Alpha low volatility and momentum. I don't have data for quality, neither I am interested, nor for the value. So I'll only show you how to construct a momentum 30 portfolio. 30 or 20. Once you get the ranking, it's just up to you, right? You can select 10, you can select 20, you can select 50, you can select all 200 also. And you can base this methodology for any broad market index. Instead of Nifty 200, if I extend it to Nifty 500, or if I extend it to Nifty micro cap, right? I can do whatever I want. Now this guy will give you a factor sheet. Methodology and factors. I've done exactly the same method, and that's what I'm going to teach you now. Let's go to momentum, right? Momentum is the buzzing topic. So where is it? This one. We'll just take 2 minutes to read whatever is given. You can download this document and read it leisurely. It's about 150 pages. So it's based on normalized momentum score, based on 6 months and 12 months price returns, adjusted for volatility. Stock weights are based on a combination of momentum score and free float market capitalization. Index has a base value of 1000 at 2500. Right now, whatever it is, those are the returns. Stocks are capped at a lower of 5% or 5 times the weight. That's your max weight that you can give to a stock. And this is the step-by-step procedure to do that. Let's do exactly what he has done. I'm deviating only one point from NSE methodology. So you use daily price data. I'm using only monthly price data, right? If I'm going fast, you tell me to slow down. I will give you the data that I'm using. So don't worry about that. So this is irritating. How do I get rid of this? get rid of this. Anyway, so let's live with it. I can't find a way. Right, so this is the data for last 1 year, December 21st to December 20. Now I have to do it as if I'm doing today. So for that, I need to download today's Power Copy. Where is today's Power Copy? Historical reports and Power Copy. And today, oh, it's already somewhere there. This one. Right? And as I said, I'm not, I'm only running on equities. So BE, BZ equity is sufficient. So symbol, and I'm not interested in other data. Close, and instead of volume, probably I take value. So traded value. Traded value and the same close and date, today's date, that is 31st January 2021, sorry 22. And I don't require this, I require this.
Kora, you can make the taskbar disappear if you need.
Yeah, how I do that?
Just put under the search, put taskbar settings and go there and make the taskbar, which is the bottom default setting, as top. It will move it to the top so that it won't disturb you.
That's fine. So I'm used to it. I mean, if I put top also, then I can't operate this.
No, it will be above that.
No. See, if I put here, again I get a disturbance of this.
You can make it disappearing. No? Only when you take your cursor down, it will come up. That's
Yeah, it's fine. I mean, like that's fine. No problem. No problem. Unless otherwise it's disturbing you. That's fine. So let's live with it. It's not a big deal. Right. So this is the data, right, for this month. Now, what I'm going to do is sort. This Excel sort is a very powerful sort because you can do multi-sort at one go. Once you start fiddling with it, you will get a feel for its power or what all things you can do. Right. So now what I'm sorting is all the symbols at one go and all the dates at one go. So I get like this, right? 20th Jan micron, 20 microns price is this, so on, so on, so like this. Now I want only 12 months. Right now I have one extra month, so I have to delete that. So how do I delete that? Again, sort. I will do other way. All the dates at one go. Let the newest be on top, oldest on the bottom, and let all the symbols be A to Z fashion. So if I do this, what am I getting this month? All the this month's dates and all the stocks. Now I don't want this because this is extra month. Ooh. Yeah, we are done. So I'm deleting this because I don't want more than 12 months data. I will save this so I don't lose the work. Now I will sort it back, like all the symbols at one place and all the dates at one place. I think new to old. Right. So that's the first step. Get the price data. Now, what is the second step? There's no right or wrong answer. You attempt. I will tell you whether you guys are correct or wrong.
Month-on-month returns. Next.
We are not yet gone there. We are basically setting up the database, price database. So the next step is see if any symbols have changed. Like this NSE symbol changes. Somewhere we will get on the first place. Changes in symbols. Download this file. This will give you the entire history of all the symbols. I am not interested in whatever happened earlier. I'm just interested in only this month. There's nothing happened in this month, right? Last month there were few symbol changes like this. So what is this? Key symbol and a new symbol. Find dolot. So find dolot. Change it to new symbol because whenever you download the new bow copy, it would have changed it to dolot algo. do that for all these 5 symbols. If it is a this month, because it's a old month, I think I would have already done it. So your symbols are taken care. That's the first step or second step after you download the price. Then what is the next step? What is the next step in the price adjustments? You have to look for bonus or splits, right? So how do you do that? It's simple. So filter, just give me only 31st Jan data. So 20 microns has given 50% returns in this year, in this month. Now your suspicious items are anything like this. These are all your suspicious candidates for either bonus or split. Just do like -20. Unfortunately, you got a pretty big number, which is 30. Go and verify for all these 30 companies. Was there a split or a bonus? This is a bonus candidate or a split candidate, right? Because it can't fall 50%. What is this stock also? Might be a suspicious candidate. This is gold. I'm not interested because that's a ETF. What is this? Maybe I'll check because if I want to be accurate. So what is IPCA story? Company information. So looks like it's a split, right? This is a split candidate in the ratio of 1:2. And this is again suspicious. What is this IMFA? Bonus 1:1. So how do you adjust this?
Price divided by 2.
Yeah, so that is another candidate. So this also will highlight. These are all the adjustments that we need. And this is another suspicious candidate. Let's see if it's a gem company. I'm not interested, but let's verify. There's nothing. There's nothing as per NSE. Or this is a step-by-step procedure like this. Or you can do money control split. Yeah, so Pankaj, Panj Alkalis, these are the splits. IPCA is a good company, and Indo Amines. What is Indo Amines? Is it listed in NSE? No, it's a BSC listed company, so it won't be there in our database. Yeah, just a BSc alone, so it won't be there. So we don't need to worry. All that we need to worry is two stocks, right? So sorry, only one stock. Ipca Lab, Punj Alkalis. I think I haven't heard this company. So it's a BSc alone. So ignore. Do the same stuff for bonus. The same search query. There's no bonus. Okay, so there's one bonus. Indian Metals. I think that IMFA. I don't know about all these junk companies. So we have to take care of two companies, I think. That's all right. IMFA and IPCA. This is not there. This is like genuine fall of 80%. Is it real? You never know these fraud companies. What is that company name? 1 point. It is actually, I think it's a split. 96 to 13, it has fallen in 1 day. Yeah, it's a bonus in the ratio of some nonsense ratio it is. Why is he even doing this? This is the ratio. For this, the adjustment is A plus B by A. So this is A and this is B. So A plus B by B.
One is to 1.5.
1 is to 1.5. But for that, why the stock has fallen that much? Has he given something else also apart from bonus? Oh, he's done quite a bit in this year. So bonus is 1 is to 2. And then face value split also he has done. So that is 10 to 2. So bonus is 1 is to 2. Actually, I don't know. This is wrong. So 1 is to 2 bonus. So divided by B. So that's 1 by 1.5 and face value split of 10 to 2, 5. So a multiplication of this is 7.5 times. Right. Let's go to that guy's company. Right. So this is 1 point. So now this whole story is divided by 7.5. All the 1 points will be that. Now, because you have written a formula, break that formula by going to notepad and pasting it back. So now the formula is gone. Right. The next is what is the other stock? IPCA. IPCA is half. 1:2 split. So your IPCA adjustment is done. The next one is what? What is the other one?
IMFA.
IMFA. IMFA, what is the story? It's a 1:1 bonus. So 2/1. So half. This becomes half. Save. So my database is ready. Simple change, bonus, split. Company name also can change, but who cares? Because symbol is what important for us than the company name. Right. So now my database is ready. Any questions so far?
I think nothing, Kora.
Or is it too boring? Right. So now our price database is done, and let's see which index you want to operate on of all the broad indices. Broad market indices somewhere you have seen, right? So you which index you want to operate momentum portfolio. The choice is yours. You can operate on any index.
Nifty 500.
Nifty 500. Okay. You can do on anything. So Nifty 500, right? Give me the list of stocks in Nifty 500 as on today. This is what the list. We're assuming he has updated it as of today. If he has done mistake, yes, we are also doing the same mistake. I mean, if he hasn't updated, but they update it fairly on time. Maybe one day here or there, you can't blame. So your Nifty 500 list is this as of today. So all the symbols. All the symbols. And it's Nifty 500 index. Just give me, is this particular stock in Nifty 500 or not? We look up of A2, I think, right? Or B2. B2. We look up of B2 in this particular array, true and false. It is not. So if error, just put something like this. Now I get all my Nifty 500 stocks. If I just filter this, it's a bit slow because there's a VLOOKUP happening. It takes about a minute or two to come out of the round. So you have to wait. There's nothing you can do about. Okay, we got the list and the data. We are not interested in all this. I think we are only interested in price and the dates and symbols. Just keep it in a new sheet. So these are all your Nifty 500 stocks and their price. Now what I have is momentum 20 working list. It's a 2-3 steps process. I will explain what it is. So I need to paste the whole business. Right. And I also need to paste close again for some reason, I don't know. Right. And today's date is 31st January 2022. I think you have to paste that here. 31st January 22. Basically, if A2 today's date equals to I2, then count how many 3M Indias are there in your database. So 30, like that for all the symbols. Now my first filtering criteria is it's exactly as per this methodology. Stock needs to have a 12-month history for it to be included. So if it is not traded for 30, I am not including that in the further filtering. So tell me which stocks as on today the count is less than 30. Less than or equal to 12. Yeah, these three stocks doesn't meet our criteria because they're freshly IPO'd. Not freshly IPO'd, but IPO has come and they still don't have 13 months history. So I'm going to remove them from my screen. So remove those three stocks. I'm also not interested in, of course, NSE doesn't put that criteria, but I'm not interested in the stocks which are trading less than 20 rupees. The reason is they're highly volatile. And the second reason is if the stock is 10 rupees, what is the minimum price stock can trade? Like tick size. 5 paisa, right?
5.
So you buy and you sell immediately, you lose 10 paisa. 10 paisa is small, but on a base of 10 rupees, that is 1%. Now 10 paisa on a base of 100 rupees is very small. Right? So that's why I delete stocks trading less than 20 rupees. I don't regret if they become goes on to become multi-bagger, but that's what it is. A rule is a rule. 31st January. Tell me the stocks which are less than 20. I don't know why Maha Bank has come. Maybe I put the same, but anyway, so we'll delete Maha Bank because it is about 20. So I'm not interested in these 4 stocks. So I'm removing all these stocks from 500. So again, we look up. If it is not there, it's remove, or else keep it. So I'm interested only in the stocks which are to be kept. So this is my interest. Any questions so far?
No questions, Kora.
All right. So then we are done with this part. We took, instead of 200, we took 500. We removed stocks which doesn't have 1 year history. The other criteria we are not interested. Now for each stock, calculate a ratio called momentum ratio. What is momentum ratio? It's price return divided by some standard deviation. And how is he calculating the standard deviation? It is annualized standard deviation of log normal daily changes. As I said, we are not doing daily, we are doing monthly business. And annualized standard deviation. What it means is you calculate log changes and you get a number and you annualize it. How do you annualize it?
Square root of 12.
Multiply by square root of 12. That's it. So that's exactly what we will do now. So what is this sheet 2 ask? It asks symbol close trade value. Actually, you don't require that, the volume, but we are just keeping it for reference in case our stock list, we want to pay attention how much daily it trades or on the day of the screen. This is 12-month returns, right? It is simple. Today's close minus 14 days ago's close. 6 months returns. Today's close minus 8 months ago close. 7 months ago close. Log changes. There's nothing fancy about it. It is simply log of today close divided by yesterday close, or this month's close divided by yesterday's month's close, or whatever the way you want. Right. So we have these daily log changes or monthly log changes and standard deviation of that. Standard deviation of these 13 items into annualized square root of 12. Same thing, standard deviation of last 6 months into square root of 12, annualized. So we have price, we have standard deviation, and calculate price divided by the standard deviation. That's exactly what I'm doing. Price divided by price change, because it's in percentages. So I converted into normal number divided by 12 months standard deviation. So I call that as a 12-month price ratio or 12 months movement. I do it for 6 months as well. 6 months price change divided by 6 months standard deviation. Simple, right? Nothing complex.
Yes.
Then what is he asking? Calculate 12 months, calculate 6 months. Then calculate Z score. Z score is nothing but momentum ratio of that particular stock minus mu, that is average of all the inverse universe, which is all the 500 stocks, divided by standard deviation of all the universe. Right? So that is what it is. 12-month ratio minus the entire average divided by the entire standard deviation. I have done a small trick here. If the company name doesn't change, don't calculate. So calculate only once. That's what I'm saying. This 12-month standard deviation. Right. So that makes my life simpler because these are all null values. So you can operate averages on this entire array. So that's Z score. Stocks number minus the average of all the universe number divided by standard deviation of all the universe. 12-month Z score, 6-month Z score.
What does it signify, Kora? Z score?
It's basically where your value is. So let's say
Should it be positive, or is it okay? It is negative also.
will be anything because if it's a negative number, it means it is not performing. It is a positive number means it is performing. Like 12 months returns are positive means it's a positive number. Standard deviation will always be a positive number. So it all depends on returns. So if positive returns, number will be positive. If negative returns, it's a negative. What it means is you have a universe universe of, let's say, 10 or 500 in this case. And if I plot all the returns, they'll be all over the place, right? So some stock would have given 500% returns. Some stock would have given 0% returns. Some stock would have given minus 50% returns. So if I plot a chart, it looks ugly. Something like this. Stock A, stock B, stock C. This has given 200% returns. This is just 5% returns. This is minus 40%. So if I plot a chart, how do I plot a chart? Yeah, this is the chart, right? So it looks ugly in the sense one is very big, one is very small, one is something else. Right? Now, if I convert them into Z scores, the chart, again, if you sort all of them, it will form like this beautiful shape. So, something like that. Right? So that is what a normalized Z score does. Right?
Okay.
So we have completed this step now. calculated all the Z score. Now he's asking us to calculate a weighted Z score. So how do I do that? Filter. I want only those Z scores. And so this is my data. Because there is a formula involved, I transfer into Notepad and come to this shit. I paste exactly all the formula. Now weighted Z score is 50% into 12 months and 50% into 6 months. That's what he says, right? 50% into 12 months and 50% into 6 months. Now, because this number is positive or negative, you need a way to normalize. See, this number is negative and this number is positive, right? So the way to do a normalization of these numbers is, if it is a positive number, simply put 1 plus that Z score, 1 plus this number. If it is a negative number, put 1 divided by 1 minus that number. That's how you normalize. So everything will become now a positive number. That's what I have. If n2 is greater than 0, it is 1 plus n2. Otherwise, 1 divided by 1 minus n2. So everything now becomes positive number. How many are these numbers? 246. How come it is only 246? Yeah, it's 500. It should be 500. Where did we go wrong? So we transferred this into here. Oh, we didn't copy. That's where we have gone wrong. Keep. And then it will work now. Yeah, now there are 500 companies. Jubil Inegra has some problem. I don't know what is the problem. What is the problem with Jubil? Okay, it doesn't have a history of 12 months, but somehow it can, because we didn't do that this particular step again. After wrong copying, right? We copied only 200 companies, something like that. So we didn't do that exercise. So that's why the Jubil, whatever is this company, has a problem. So delete that. And this one also has a problem, Kalyan Jewelers, which is 12 months history. Now, still some problem somewhere. What is that? Okay, this guy has a problem. Sona counts. Railtel doesn't have a 12 months history. PCBL doesn't have a 12 month history. Najara doesn't have a 12 month history. Loda, Lakchem. Now we are done. So all the problems are fixed. And rank. Sort by your rank. 1 being the highest momentum rank, 500 being the lowest. So now it's up to you how many stocks you want to choose. How many stocks you want to choose?
15.
15 is too small. I would say go for 20. So this is your portfolio. These stocks, if you want to do a momentum, or if you want to announce a momentum like this, so this becomes your proprietary index, monthly rebalance, or whatever you want. Now weighting, I would say equal, go with equal weight. Cap weight and all this stuff are little bullshit, if I were to be frank. So go with equal weight to start with. And then you perform this in the same stuff next month. All right. So let's say next month is these two are gone, right? And something like this kept, just for an example. So whatever is gone, you sell off. You get some money, depending on whatever is your allocation. You reinvest that money into these new stocks. Keep doing that. You can do it daily if you have patience. You can do weekly. You can do monthly. But my preference is quarterly. The reason is I want to give this particular stock a chance to perform. How does a stock perform? How does a stock perform?
If quarterly results are good.
If quarterly results are good, so give that chance. So the chance will be given only if you hold for 3 months. if you only hold for a month, you may or may not get that chance, or you may not be giving that particular stock a chance to perform. The performance can be either a good performance or bad performance, which we don't have a control, but at least we should give it a chance. So I would prefer quarterly for the same analytical reason. But you are free to do either daily or weekly or whatever. And now, higher the frequency, higher the transaction cost. Like each time you sell and buy a stock, you have to pay some amount. The lower the frequency, lower the transaction cost. So that's advantage and disadvantages. So you decide what suits best for you. Right, so that's it. You have constructed a momentum index of your own, or a screener of momentum stocks exactly like the way NSE does.
Kora, you were mentioning about TTML in Twitter. Any specific reason behind that?
TTML?
You have few tweets on TTML. Has it gone bad, or is it
investing career, which started from I would say like 2016 or 17 onwards, and I also started dabbling in stocks only since 3 years. Earlier, I never bothered because my specialty was either short-term trading or options or futures or whatever. And I used to do only on Nifty or Bank Nifty. Or in US, it's only S&P. Now, because I also wanted to learn, I started doing some stocks. I'm very much excited in TTML because I bought it at 35 rupees when it came onto my screen.
Very good, very good.
And it was in the screener. Because if you had run this screener on September or somewhere, you would have got it. So it is more than, it is more of a, what you call as a jumping with joy kind of stuff. I follow TTML. Otherwise, I don't have any interest. And my investment in that is only whatever the small allocation into this momentum portfolio, which is roughly about 8 to 10% of the money that I manage. In that, it is buy 20. So it doesn't change my lifestyle. Of course, it's an excitement because I caught it at 35 rupees. It went all the way to 300. Now it is falling back. I don't have any regrets, even if it goes back to 35. If my screener tells get out, I will get out. I will try to get out if possible. If it is in lower circuit, there's nothing I can do about it. So I have to wait.
Good to note that. Thanks, Kora.
Yeah, even today, if you run the screener, TTML comes. So if you like this momentum investing, yeah, if you have to really follow the rules, you have to buy TTML. There's nothing wrong about it. There's nothing I can do about it also. Right now, it is in lower circuit. So you will definitely get a buy, but you won't get a sell. So it is up to you. All right.
Thank you, Kora. Thank you.
Right. So we have 2 more screeners. I'll just take a small break of 5 minutes. What is this chat? I don't complicate things like this, like trend filter, this, that. I would follow a simple methodology. I won't complicate further. And NSE index committee methodology is fairly scientific, fairly methodological. So I would just follow. I won't make a mess out of it because I know exactly if I the Nifty 200 momentum fact sheet, I know exactly all the drawdown details, all the returns profiles, so I'm prepared to follow that. If What is the Nifty momentum index doing now? How much is the value is what I'm interested. How much it is? $20,000. The base was 1,000 in 2005. So it is right now 20,000. Started on 1,000. I think this is April 2005. That's what we have seen, right? And this is today. So my number of years is how much? $16 years. And what is my CAGR? This is pretty high. 20% returns is what it is annualized. Best investor in the world is the same 25% or whatever. You are not matching the best investor, but you are at least close to it. And if you do it for 20 years from now, your 1 lakh is becoming 20 lakhs. Provided the past results are future results. So I wouldn't mess up by putting more filters, by reading all junk like RSI, moving averages. Yes, I might read, and if it's useful, I might use the knowledge, but I won't mess up to this particular question. Right? Yeah, you are free to do it, but if this is what I'm going to get in the next 16 years, why should I mess up the whole story? Okay, I require about 5 minutes break. So I'm just muting, and I'll be back in 5 minutes. That's the momentum. If you have the data for, we have only price returns, right? If you had a data for the value components or the quality component, you perform the same analysis, you get a new list based on that particular factor value. Right now it's a momentum. Replace this with quality, you will get a quality list. Now we also have another index called low volatility index. Let's see what they do, right? Where is it? Alpha low volatility. Alpha low volatility. Where is it? This one. It's fine. Eligibility criteria is whatever broader index you want to use, you can use. And these are all the various factors: alpha, quality, value, and low volatility. Now, what does it do? This is alpha. So you calculate Jensen's alpha value of each stock, and you get a alpha Z score, and percentile distribution of that alpha Z score is the ranking mechanism, and select top 20. That's what it is. Now, how do we calculate Jensen's alpha? Quality, value, low volatility, alpha factor. Same morning I described, right? Alpha is calculated as returns of the stock minus risk-free rate, beta into market returns minus risk-free returns. If risk-free rate is set to 0, it simply becomes returns minus returns of the stock minus beta into market returns. Let's do that. I'm just going to use the same 500 list, right? Nifty 500 is my base index. You can, now you know the method, so you can extend it to whatever index you want. You don't want for Nifty 500, you want only for Nifty 100, you can do it. If you want only for micro cap 250, yes, you can do it, right? Let me correct that small mistake that I did. So less than or equal to 12. So my list is this. And I don't want price to be less than 20. Less than 20. So this is another list. So remove all of them. So now the keep list is this one. Filter, keep. So this is my data, and I have a template for alpha low. Sheet 1 is just basically the removal of that list. Sheet 2 is where the small calculation step by step. So we will paste our data here. Now I want Nifty 500 to calculate market returns. I want Nifty 500. So how do I get that? I go here, Nifty indices. I want Nifty 500 for last 2 years. I just want only 1 year's data. It's fine. Submit. Download and convert this into monthly data. This becomes 31st Jan, that's fine. If the month is not equals to this, then it's end of the month. Otherwise, I'm not interested. This is also end of month. So give me all the end of month values. These are my values. And these are the corresponding dates. I don't need all this. Right, so I have Nifty 500 values because that's what my benchmark for these stocks. This is a stock returns each month, index returns each month. I just have taken the lookup of that index. So I have index values for each month. Index returns and stock returns and beta and alpha. I've used a different beta method because there are like multiple methods. So you could use simply slope because that's just a one-line formula. I'm also interested in correlation of the stock. So just to see, that's it. There's nothing. So now I have these calculations across the board. Just copy it. I've considered risk-free rate at 0 because it just makes simple things. And it is the current values. So you should have 500 or whatever, the 400 odd. And simply paste here. So this data is alpha with 0 interest rate. Now Z score of volatility, Z score of alpha, and volatility factor score, That is normalizing. If it is a negative number, 1 divided by 1 minus. If it is a positive number, 1 plus. That's how you normalize. You normalize alpha factor as well. Then the percentile amongst the volatility factor. Basically, percentile is from 0 to 100. 100 being the topmost, 0 being the bottommost. Same with alpha factor. Now, a weighted average 50-50 to each. And then you sort them by a rank. So sort. This is your alpha level stock list from Nifty 500 basket. You basically have quite a few negative correlated stocks here. And you also have a negative beta at a monthly level, not at daily level. So somebody asked, right, like how do you get beta negative? So you got it for quite a few stocks. It's a pretty interesting basket. Interesting because there are some negative correlation stocks. What it means is, if stock market is falling, you are making money. If stock market is gaining, you are losing money. Right?
Yeah, right.
Kora, is it
When everybody is
okay?
crying, you are laughing to the bank. When everybody is laughing to the bank, you are crying.
Kora, in this portfolio, if you now look at the top 7 stocks are negative correlated.
Yeah, that's what it is. Top 7 or 6 stock. This is even worse, like 0.6 negative correlation. This is at a monthly figure, so daily figure might differ, but it is what it is. So this is how a step-by-step procedure to construct alpha level index or screener.
So this negative correlation, does it qualify as defensives, or what you will call it? Is it a sign of topping out of a market, or?
Nothing. I mean, that particular stock characteristic, not the entire market. Right?
Yeah, so probably it's like a defensive stock. Is that what you would call it?
I won't categorize as a defensive. The characteristics are, if market is going up, your stock is going down. If market is going down, your stock is going up. That's what it is.
Yeah, makes sense. I mean, it's not right to classify it. It's just a sign of what it is. So.
Yeah, it is. I mean, you can classify because you are looking at Pidilite as a defensive stock, Infosys as a defensive stock. But Glaxo is a pretty much defensive stock. Because you are looking at the stock names, that thing is mind. Otherwise, IEX is what defense it is, purely offensive stock, right?
Yeah.
Even Titan is your purely offensive stock. So yeah, but it is what it is. I mean, the list. If you are a fund manager doing a Nifty 500 alpha index, this is how you do it.
Kora, is there any overlap between this one and the momentum?
There will be sometimes, because top 20 stocks. This is Momo and This is alpha low wall. Now this and this. I would put here. Sort. Remove duplicates. Do a count. Now sort. These are your stocks, which are both in momentum and low wall. Century ply, that is.
Thanks, Kora.
And to whatever ranking we are choosing, to find out the drawdown, we need to accumulate the data throughout for whatever period we want to find out, right?
Of course, it's painful to go through drawdown, but you look at this bigger picture. Why worry in between when you have so many other worries? This is your bigger picture. If you stick to this method, and if you think past results are going to be future results, your 1,000 rupees is becoming 20,000 rupees in 2022 plus 17 years, 2040. Of course, it goes through gyrations of including 50% drawdown as well. Don't worry, is what my message. If you are worrying too much, I won't hesitate to call you. You are unfit for investing in equities. You might as well invest in bonds or something else. It might be a stupid answer from me, but everybody has gone through drawdown, including Warren Buffett, Rakesh Jhunjhunwala, or anybody. So why are you so special that you don't want to go through drawdown? Right?
Yeah.
I mean, my answer is that you may agree, don't agree. Either way, it's fine. Right?
And in the indexes, this is like equal weightage or like a momentum 30.
We start with equal weighting because equal weighting is simpler. So if you go and you require some basing factor, right? Like why I'm saying equal weight. So this is your Nifty 50. This is your factor. Just select top 10. Top 10 market cap. I'll just show you instead of telling you market cap. So market cap is 8.
Yeah.
And I'm selecting just top so that we don't complicate. Filter, just top 10.
Largest to smaller.
Now filter and top 10. Everything is equal, right? And this is the first factor, which is market cap. So straight, that is as per market cap. What is the figure?
225.
325. Now what I'm telling is simple, make it equal. What is the number?
43.
It's better than cap.
Yeah.
So that's the answer to your question. And come back to me if 1 year doesn't perform as per your expectation, because this is going to happen over the 14 years. So you have to wait for 14 years for you.
Yes, got it.
Any questions so far?
Kora, in momentum investing, how do we maintain the equal weightage at the time of rebalance?
At the time
The
of
one-
rebalancing, you don't do equal weightage. I mean, that's a costly exercise because let it run.
So the new stocks
Only
which are
at the
entering,
starting point, you do equal weight. And after a while, after 4 months or 6 months, one stock will be running, let it run. Now, if you think it is too much weightage, like sometimes it can go up to 15%, 20%. So in my case, TTML at 300 rupees went all the way to 20% in the portfolio, even though I started with 5% weightage at some point. So I was in dilemma whether to keep that as the same weightage or book some profit. I didn't book any profits. I just booked. I brought down the 25% weightage to 23, something like that. So that's up to you. That's a qualitative judgment. Once you experience a gainer, mega gainer like that, then you decide. Otherwise, it will be whatever rebalancing you do, either monthly or quarterly, right? So it will be 5. If it has run up, it will go to 6%. It doesn't matter. 5 and 6, there is no difference. Right?
so at the time of rebalancing, if we have a new entry, then whatever money we are getting out of the two stocks which we are selling, we will reallocate.
Yeah, I will
it to
use
the
that. Correct.
new entry.
Yeah. So sometimes I might not be even 5% also. If those two stocks, ideally they should give me 10 rupees, right? If they have given me only 8 rupees, then my new stocks weightage is only 4.
Correct.
The whole point is I don't want to put additional money. Whatever the started at the year start, only that will be rotated.
Okay, thanks.
Any question? And I have a small other screener which will take 5 minutes. And with that, I think we are done. And I think I have done, may not be 100% justice, but whatever I promised. I haven't put any contents. I don't know. Somehow I forgot it. But I think I have done. As I said, may not be 100% justification, but some justification to whatever I promised. So the other screener which I like is insider trading. To do this, just download, submit. This is the link. BSc Insider Trading Data. If you search, you'll get it. This is the entire transactions. Download them. You will have this recording, so you can try to replicate. You just need to spend some time, right? Maybe a day, maybe 2 days, whatever it is. I'm not interested in all the transactions. This is the mode of transaction. I'm only interested in market purchases, these guys do. So give me only ESOP, ESOS, and the market purchases and market sales. I'm not interested in pledge, whatever these guys do. So this is my filtered data for this month. Now acquisition means he bought, disposal means he sold. So this is the entire security code. Remove duplicates. Sorted. Total acquisition amount and total disposal amount. Sum ifs. Where is that amount? This is the value. Sum here. Criteria 1 is security equals to my security, and the mode is acquisition. Transaction type is acquisition. And I'm copying it, so I don't want it to move. I will copy the same thing and get it for disposal. This becomes AF. My net is acquisition minus disposal. I also want to know what is this guy's name. The name of the company is second. Then I want to know what is that guy's name, which is third, I think. And I want to know what is the relationship with the company. This is my final list. I will put it in a different sheet. And I will sort by net amount. Launch. So these are all the big transactions that happened. Net. And this particular thing may be inaccurate because we are just doing a VLOOKUP. So ideally, if you want to go back and observe in detail in closer with close eyes. And I'm not interested in this trust because the trust has anyway a lot of money. So I'll delete that. Again, this is a company. Company will have a lot of money. I will delete it. This looks interesting because some person called Ashish Garg, whoever is an employee, has bought that much stock. I think it's 20 crores or 2 crores, whatever. Yeah. Delete that. Delete all the fund, all the trust, everything. Restrict this to individuals. If you like, you buy that company. If you don't like, don't buy. The second thing is, my belief is this is Kotak Mahindra Bank. You already have some exposure to Kotak Mahindra Bank in terms of if you invest in Nifty, you have some ownership. So delete the Nifty 100 index. Look only for small cap or micro cap. That's where the guy might have some extra information. Right?
Yeah.
This I don't have a much history, but this screen has a merit than any of your RSI, MACD, ADX, because these guys know something about the company. That's why they are putting the money. Obviously, whatever is that Abhay Kulkarni, but that's a Mahindra and Mahindra. So obviously, Sabu Jacob knows better than you and me what is happening in Titex, and he has put his personal money, which is that much. So why can't you put 100 rupees? Sorry, not 100,000 or 2,000, depending on how much ever you want to lose. If you think Sabu Joseph has the extra information than you want, obviously he has. And if we go wrong, he also has gone wrong. So we can blame him. And anyway, if we make money, we are not going to thank him because that's our nature, right? Not only our nature, any human being. I'm not saying you and me, any human being does. All right, so I am done. For the day and the course, whatever I promised, I will collate the recordings and I will also share all the Excel material. And I have a small, it's not actually a promotion. Just because, yeah, it's my course or my mic, I can pass on the message. This is pretty much plus little extra is what I cover in this newsletter. It just started, 2 months old. You'll get the same list and maybe little extra information, bits and pieces. It costs about 9,999 per year. And whoever has attended either this course or that 1,000 rupees course, you will get a refund. I generally do it myself, but if I forget, you have to remind me. If any of you fall into that category, it's not like I don't want to tell and I want to forget or act like I'm forgetting. It just so happens. Each week I try to collate. In case if I miss in refunding, you remind me. There's nothing wrong because I also might make mistakes. I will refund it in a not immediately, in a day or two, whatever time I did. Like I have to collate, right? So that is what this newsletter is about.
Kora, can you throw some light on your other course which you have, what you cover?
Which one? This one, huh?
Not that you run that 8-day course, right?
I actually don't. I don't want to market too much, but yeah, this is what.
No, it's just a curiosity. What are the
Yeah,
things?
so this is it's a ground up course which covers the entire stuff. This is what the content, and you have seen. Of course, this today I went really. The participants do or share with me, but normally I do that. I don't spend more than half an hour in a day with my computer. I will let the participants do. This is what the entire course is about.
And this is spread across how many days, Kora?
It is 6+ days, 6 days. But if the guys are slow and whatever, I generally extend it for one more day.
And dates all are pre-fixed, is it?
It is fixed because I'm not sounding arrogant. I will do only this course whenever I'm free and I'm committed. Otherwise, I'm not doing it every month or every. I mean, this is not my main source of income. I do it for fun, and if I educate somebody, it's well and good. And I'm not denying that I won't make money, because even if I charge you 1 rupee, I'm making 1 rupee. Yeah, so it is like once in a quarter, or sometimes I do it based on some offline, online requests, and I don't accept more than 10 guys. If by chance, if I miss and I get 11th participant, I will politely tell him I will return your money, or I will keep it, wait till whenever I announce it.
Okay. Thanks, Kora.
What about that stock selection course you were telling last week?
Sorry?
That stock selection webinar you were telling last week. That one.
This is the one. What today we covered, that's the stock selection webinar, right?
Okay.
Didn't I cover, or did I cover something else?
No, I thought that is different one you were telling.
No, this is the same.
Okay.
No, Kora, I think you referred to that asset allocation one during the
Oh,
course.
asset allocation. Yeah, so that's the same small course. It's about 4 to 5 hours. And there's no harm in attending because it's a little bit of different material, but there is an overlap. But you'll get some other concepts in that course as well, and it is just 1,000 rupees. Why 1,000 is I want to keep as low as possible, and at the same time I have to charge. If I don't charge, there's no seriousness between you and me. See, today morning there was. If I'm doing it free, I couldn't have. I just would have slept off and said sorry, you guys, because you paid, you were commanding, and it's some technical glitch which I was not aware of. So 10 guys, you guys are running around. I'm also running around for 10 minutes. And that command won't be there if you don't pay me, right? And that's true for anybody. That's true for you also. If you are organizing any course or employing somebody, you will also do the same stuff.
Kora, one question.
If you don't have any questions, I hope you guys learned something. And please drop in your feedback. I don't mind whether it's good, bad, or ugly. If it is something to be improved, yeah, put that. I will try to improvise the course material or the way that I deliver or things like that. If you liked it, yeah, put the same stuff in here.
So we don't have access to put that comment there unless and until we are subscribed.
Oh, okay. Let me change that because I don't do that because some backlinks, all this nonsense will be there. That's why I avoid selecting that. Yeah, allow comments from everyone. It's there. Yeah, this post is for everyone. Comments, anybody can comment. You can do that. Only for other things, I disable this option.
I tried for that asset allocation last week. I attended.
Maybe I would have, maybe right, because I would have selected that option. I will try to change it. Let me change after we are done. So if you guys don't have any questions, I would close it. And
Just one question, Kora, just one last question.
Yeah.
In this monthly newsletter you publish,
yeah,
all of the portfolios which you publish and track, do you invest in all of them or how is it? Like, how can it be an investable basket?
I pick up 80% of my money into one of the momentum portfolios in MSL 400 index, and the rest of the 20% I put in micro cap, 10% each in alpha lowall and momentum. Other indices or other baskets I track, and I'm happy if it's not a question of happiness. If I'm investing in MSL 400 based momentum index, that's fine. Even though I cover multiple portfolios, it's just an individual preference. So sometimes some guys, there are like few fund managers who are subscribed to that. Their answer to me is, I don't want MSL 400. I want only exposure to mid cap. So he is only interested in mid cap 150 basket. That's how I do it. And if I have some extra money, yes, of course I do get extra money every month, right? I get a salary or something like that. Even you also. So use 5,000 or 10,000 rupees in whatever other things I write. Insider screener, this screener, that screener. So you only lose that much max. So that's how I do it. And the other reason is the other thing what you get is once in a month I meet for an hour or so. So you could call that as a hand holding or whatever. You get that. And whenever I visit any city, I generally invite all the guys who are in the city for a drink or dinner. So that's also part of your 9,000 package you could consider. Yeah, at least once in a year I try to meet. At least I send an invite for all the Bangalore guys. Other cities, yes. Whenever I go there, I try to make some time. Last time I met some 6 to 8 folks in Delhi. Next time when I'm in Bombay, I'll, let you know. At least I will put up on these two websites. So you just need to reply to that mail. That's it. Like this.
Yeah. Last time we saw for Delhi time.
Like this, right? So just see this. I
Yeah.
also would have put the same message on Twitter. Yeah, just reply saying I want to meet, and I will tell you where I'm arranging that meet. Right? So, all right, guys. So thanks for your time. If in case you get any other query, just drop in an email. Either I will try to answer, or I will call you and spend like few minutes if possible. And don't expect a real-time answer. I'll take some time, my own time. So, but again, in spite of that, if I don't respond, send a reminder, like reasonable time, like a week or not a week, 2-3 days. Yeah, if I don't respond in between, maybe set a reminder to again reminding you. All right. With that, thanks and have a nice weekend. I hope you learned something new for the day.
Thanks, Kora.
Thanks, Kora. This was a good
Thank you.
session. Yeah.
Thank you, Kora.